The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the April 9th, the wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hey, let's make sure we have an extraordinary one. Now, the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. I do want you to know I am absolutely grateful for your presence here. But more important than that, and that's this, during this next 53 minutes, I'm here to serve you. So feel free to send me an email, send it off to Steve at TFNN.com. Inside the subject heading, please put radio show question. Of course, if you're inside our Tiger's Den, well, then any and every ping will do. So let's go ahead and get this show started on wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Well, we begin our day with a mixed bag out there. We got markets that are just, changing quickly. At this moment in time, Dow is down about 83 points. S&P's up 2. NASDAQ 100's up 148. Russell's off 16. Tranny's down 17. Semis are up 66. NASDAQ Composite up 144. New York Stock Exchange off a couple hundred points out there. Gold is up almost $100. It's up $98.80. Silver's up 54 cents. Light sweet crude back 3 buckaroonies out there. On our screen out here, we've got the XLK. The XLK is going to go ahead and complete a TD9 count bottom pattern today. It is trading with inside a new bullish structured profile that formed yesterday. If price is able to close above 184 even Steven, that's the center of its profile, odds favor that it will make a run for the 195.74 level. If it does that by Friday, well, what we have to watch is Friday. So you've got a bottom on the daily time frame. On the weekly time frame, if you were to get a bullish reversal candle, you would have a buy the D point pattern. But also bar number 8 is going to form this week. And when bar number 8 forms, when it's made the higher low of the pattern, 9% of the time it goes ahead and completes that TD9 count bottom pattern. So the daily, we've got a confirmed pattern. The weekly, it may be this week's low that is the bottom for that TD9 count, and so we would have a low there. If we look at the monthly, and this is the number one sector inside of the S&P 500. If we take a look at the XLK for its monthly time frame, we can see that price is trading below profile support, but it's trading above its breakout level 164.30. So there's been nothing that's been broken inside the XLK. And finally, if we look at the 30-minute time frame chart out there, there was a TD9 count bottom pattern that went ahead and formed at 3:30 yesterday at 4 o'clock yesterday afternoon. And now we've just seen some sideways movement, but price is above its oscillator and change line. This suggests that price should move up towards 188, 190.18 level. In order for the 30-minute to really get, for this to get really bullish out here, that's from a 30-minute standpoint, what you'd really need to see is a close above 192.84. But you got the bottom signal on the daily, potential on the weekly. You've got the bottom signal on the 30-minute time frame chart, so it's time for it to get going. Of course, we'd want to take a look at the top 8 instruments of the XLK to get a feel for that. In other words, what are they showing us out there? With regard to other bottom patterns out there, you've got the Microsoft is going to go ahead and complete a TD9 count bottom pattern today for its daily time frame. So let's go ahead and pull up its charts. It also formed a new profile yesterday. Now it's struggling to get back inside it. In order for that to accomplish, it needs to close above the bottom, 362.53. If it can do that, it has resistance just above that at the 365 area. And if it can clear that, then we should make a move up towards 371.39, 380.26. Now, what's really needed for Microsoft come Friday is it needs to close above last week's low. Last week's low was a TD9 count, a completion of a TD9 count bottom. So if it closes below 359.48, that is not good news for Microsoft. In fact, that would signal that Microsoft is likely getting ready to pull back towards the 321.59 level. But if on Friday price closes above 359.48, you're going to have a bottom on the daily, a bottom on the weekly chart, and the monthly really not being the one that would be controlling things. Now, the weekly chart is suggesting that price would rally up towards the 391 level. That's its red oscillator and change line. As far as anything else, Palantir, we took a look at that yesterday. It formed a TD9 count bottom pattern yesterday. It's going to complete that pattern today. It also formed a new profile. It has support at 75.42 and resistance up at the 87.05 level. Its oscillator and change line has been resistance, and that's what it's dealing with as we speak right now. That's Palantir. So let's take you can clearly see that. So all rallies have stopped there. If price can clear that, it being 82.30, then we should see a move to either 87.05 or 93.65. So that's what's going on with regard to Palantir. Why don't we move off of this into some of the other elements of the market, such as the oversold condition. For that, we take a look at the advanced decline oscillator. The advanced decline oscillator is down at minus 255. All you need to do is close below minus 150 to get to oversold. So now we're called super oversold out there. And that condition is going to be worked off one way or another. It's either going to be worked off by an explosive move to the north out of here, or what we're going to see is choppy period out here with the advanced decline oscillator forming higher lows with price making lower lows. And that would then generate a divergence pattern. Don't know if that's what's going to form just yet because neither have really taken off. But we are in the extreme oversold condition level for the advanced decline oscillator for the New York Stock Exchange out there. No bottom signal, by the way, in the New York Stock Exchange. It will form bar number 9 of a TD9 count, as we discussed at the 11 o'clock update. I'll put the charts up. So the New York Stock Exchange is doing the exact same things that the daily equity future contracts are doing. So let's pull those up here. Here you'll be able to see the ESNQ and the Dow. Each you can see will form bar number 9 of a TD9 count, but that is not the bottom because the low came in on bar number 7. So what's needed here for the ES, the NQ, and the Dow is either a bullish reversal candle or we need to see a spike below Monday's low out there. Not a close blow, just simply one tick below Monday's low will trigger a TD9 count bottom. Now, if it doesn't happen today, it could happen tomorrow. If it doesn't happen tomorrow, then it just doesn't happen at all, and that pattern goes away. And what would be left would be both the ESNQ and the Dow would need bullish reversal candles to confirm their buy the D point or Gartley buy patterns. In the case of the Russell 2000 already has a buy the D point pattern. The only way that gets negated is a close below Monday's low. Monday's low for the Russell 2000, 1748 even Steven. We did tick below Monday's low, so it's going to go ahead and form a valid TD9 count bottom pattern today. We'll complete that pattern tomorrow. This suggests that what the Russell 2000 ought to do is rally up towards 1882. So are we getting the signal of a bottom from the weakest indice? It's a real possibility. Steve Rhodes with TFNN. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We got Obi-Wan looking over Stevie's shoulder. You know why? We've got his favorite charts up on the screen, those 10-minute charts. He's having a blast upstairs. He loves those two-way markets, and boy, do we have two-way markets up there. So, Tom, what we're looking for on the 10-minute time frame chart is to see if price can take out the TD9 count tops. Each of those 10-minute time frame charts this morning at 10:10 formed those TD9 count patterns. Price pulled back and tested support, and the support being the bottom of their profiles out there. So what we're now watching for on this rally is, can price take out those highs? In the case of the ES Mini, the number you're watching is 5087.25. In the case of the NQ, the number that you're watching is 17,597.50. In the case of the Dow, the number that you're watching out here is 38,214. And finally, in the case of the Russell 2000, the number out here is 1792.20. If we close above those levels out there, you should expect and anticipate a further rally. In fact, you can take your 10-minute charts and go ahead and draw on your A to B equals CD patterns to the upside, because that would be the initial price projection. So that's what I'd be looking for intraday as we speak right now. Now let's go take a look at what's going on in some of the requests that we've got out here. And thanks for everybody who sent in those requests early. The first one coming in from Hector and Patty. Hector and Patty, nice to hear from you. Want to take a look at CRS. Hector and Patty are looking at the A to B equals CD pattern to the downside in the daily time frame. We all see that in here. What we don't see, Hector and Patty, is a bullish reversal candle. So much kind of like the ES, the NQ, and the YM out there. Now, in that case here, these will not form TD9 count patterns, but at least, so what you're looking for here is some type of bullish reversal candle. What you do have is price, in essence, found support at the bottom of its daily profile, which formed yesterday, and that's at 143.60. You've got resistance, which is a sell zone, and the sell zone is between 163.58 and 173.57. So to answer your question, do we have a daily bottom pattern? The answer is we do not. We just simply have something where price found support, in essence, at the bottom of its daily profile. If you look at the weekly time frame, you have that same A to B equals CD pattern. So it too would be needing a bullish reversal candle to confirm a bottom. Short of that, price might want to actually target over time 103.37. That is its breakout level. And finally, when we take a look at the monthly time frame chart, this top with a wave number 7 pattern out there. one of those Chapman Rove waves. And I think this one actually follows the criteria. And now what we have is CRS is trading below its bullish structured monthly profile. Granted, it is only April the 9th out there, so hard to say what it's going to look like at the end of the month. But a close below 157.28 would not be good news. So what you're waiting for here is you are waiting for, and look, it should really form a bottom. What do you mean, Steve-O? This is the first retracement. So we've had one 2-month retracement since July of 2022 out there. This might be the second one. Now, it has had 3-bar retracements, but, typically you get knee-jerk reactions after 2 bars to the downside. So on CRS, wait for a daily bullish reversal candle. If you're looking to enter there, just be careful with regard to the weekly and the monthly time frame charts for you. So I hope that helps you out. And as always, thanks so much for sending in a request. Robert also sending in a couple of requests. The first one was, and his question is, which one looks better? And that's going to be 2 that we're looking at. The first one's going to be Chipotle, CMG. The second one's going to be Cava, CAVA. We take a look at Chipotle out here. What it's also waiting for, Robert, is a bullish reversal candle. Now, here we don't have to even pay attention to the A to B equals CD patterns because we have a Rhodes momentum indicator signal that's been triggered. So if we get a bullish reversal candle, then you got a daily bottom. What you then would be looking for is, can price get above 48.78? At the moment, that is the bottom of its daily profile, and price is trading below that level. So that's going to become your first level of resistance should you get a bullish reversal candle. Now, what we like about the charts here is the weekly time frame. Bar number 9 is going to go ahead and complete on Friday. That says that we either have a bottom this week or we have a bottom sometime next week. I'd say it's more likely this week at this moment in time, but we need that bullish reversal candle. The monthly time frame chart has found support, has a Rhodes momentum indicator top, and it has found support at the bottom of its profile out there. So what you're waiting for, so Robert, keep this on your radar out there. What you're waiting for to pull the trigger is a daily bullish reversal candle. And then I'd say, look, it's not that you're not going to have battles up top, but you got a daily, a weekly, in essence, a monthly bottoming signal for Chipotle. Now, I'm not going to be able to necessarily remember what I just said about all this as I take a look at Cava. So your question is, which of these 2 is best? I need you to make that decision. I'll deliver to you the information. I don't want to have to remember what I just said even 2 minutes ago. Too much going on. But I think you get that. Now let's take a look at Cava and see what it is suggesting to us. CAVA has the Rhodes momentum indicator bottom pattern for its daily time frame. Price is trying to get back inside its profile. To accomplish that, it just needs a close today above 79.57. If it can do that, then it's going to go take on resistance levels at 83.11, 87.37, and 88.43 out there. But do you have the daily bottom in Cava? You absolutely do. Do you have battles up top? Yes, I think we're going to have battles up top no matter what takes place out here. But you got the daily bottom, and guess what? On the weekly time frame chart, you're going to form bar number 8 of a TD9 count. Now, if this turns out to be a bullish reversal candle, and it's not just yet, but should the rally continue through Friday, which it should, then you could get a bullish reversal candle that would confirm a weekly by the D-point pattern. With Cava on its monthly time frame, finding support at the bottom of its profile, 76.78. Your question was which one was better. Stevie says they're both pretty darn good out there. So that here you've at least got the daily confirmation of a bottom signal out there. So I hope that helps you out, Robert. And but both look good. You just need a little bit of help on the daily time frame for Chipotle. Sat P writes in and is looking maybe to add or pick up a few shares with Upstart, I believe it is. UPST is the ticker symbol out there. And here when we take a look at its daily time frame, what we don't see is a bottom pattern. Nope. And it's not going to form one today out there. So it's got an A to B equals CD pattern to the downside. Was the B point taken out? The B point was March the 11th. And there was 5.7, it's called 6 million shares that traded. It was taken out with 10 million shares. So how about the weekly chart? Was its B point taken out with volume? The B point had 29 million shares. That's the week of March 14th. And that was taken out with 36 million shares. And we're trading below TD9 count breakout support at 37.41. This is not, Sat P, the instrument to take even a few shares in. You've got to confirm weekly A to B equals CD pattern. That gets us down pretty much below where everybody is traded, where this instrument is traded. Where's the next support level? Well, you do have a new profile that has support between 33.15 and 34.91. A close below, really, it would have to be a close below Friday's low. The low would be 31.40. If you see a close below 31.40, this is headed to the downside. But I don't like what we see here in the charts. Maybe it's going to be Shopify, which I think is what you also wanted to, what you're comparing or looking at. And in the case of Shopify, it does have a confirmed by the D point pattern. So that formed 2 days ago. So you got a bottom there. You have a bullish structured profile. A close today above the center of that bullish structured profile, or the buy zone, is between 73 even Steven and 76.16. But a close above 76.16 is going to get you up to 85.43. Now the weekly time frame chart, geez Louise, no bottom signal out here. This could easily move lower, but the monthly chart, at least you found support at 72.81. So if it's quick trade out there in Shopify, I'd say fire away now. Steve Rhodes with TFNN. We'll be right back.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs? Trade wars? Analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
This portion of the Trader's Edge is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We're taking a look at applied materials out here. This is for Lee M. And Lee, thanks for your comments about the media. Lee uses the media comments as kind of a sentiment indicator as to when things are about to change. In other words, his thought process there is that pretty much everybody has to be wrong, and that's your indication that we might have a bottom out there. And so if we take a look at applied materials out here, it does have a confirmed by the D point pattern. It also has a wave number 7 pattern. They both formed on the same day. That was 2 days ago. So if we take a look at Monday out there, that's going to be your key level of support to watch. That low out there, by the way, is at 123.74. Now, what we like about applied, now there's also a new profile. That has actually formed today. And the new profile, let me give that to you, it's got support at 126.35. and resistance at 147.19. It's really a resistance zone, so between 141.98 and 147.19. Now, what you like about applied materials out here is you've got a TD9 count bottom pattern that's going to go ahead and form come Friday. So you've got a confirmed bottom pattern on the weekly time frame, a confirmed bottom pattern on the daily time frame, and guess what? You're in bar number 9 on the monthly time frame. So that's going to go ahead and form, unless there's some type of gigantic rally. But if it does, you got into it because of the daily and the weekly charts out there, not going to matter. But I don't think that's the case. So if you're looking for bottoms out here, and who doesn't like a nice bottom out here these days, AMAT is the one that you're looking for. You got it for all 3 time frames out there. So thanks for bringing that to the attention of all of the Denners out there. Let's take a look at the second request that you had, which is MCHP out there. So let's pull this one up. I don't recall if your question might have been which of these two looks better, but certainly, applied material, it's not going to get too much better than that. But if we take a look at microchip technology, we have a daily TD9 count bottom pattern out here. That's going to go ahead and complete today. There is a new profile that has formed. You have support out here at 35.76 and resistance at 42.30. We're at 35.84 right now. If you look at the weekly time frame chart, nowhere near as nice as the weekly time frame chart for applied materials out there. This has got no bottom signal whatsoever. Now, I can draw in a conservative A to B equals CD pattern, probably a couple of them, and so a bullish reversal candle would confirm a bottom on the weekly time frame. The monthly time frame says at some point in time the weekly is going to get the message. On a monthly time, or else all things are going to where. Because on a monthly time frame, this is the completion of a TD9 count bottom pattern. Let me just open up the charts here for microchip, take this back, see if there were any other monthly TD9 count bottom patterns. Those are pretty hard to do. And I don't see one out here taking us back into the 2010 time period out there. So this will be the first one out here that it forms. But the monthly time frame chart is saying bottom, bottom, bottom. The daily did that a couple of days ago out there. And the weekly is just in a world of its own out there. So I hope that helps you out, Lee. Again, thanks for the request and the comments out there. No Spin wants to take a look at the U.S. dollar index out here. So what I don't have here at No Spin is my feed to be able to give you live what's going on with U.S. dollar index, and my e-signal system is shut down just so that this part of the presentation can be somewhat smooth. But we will take a look at the 3 primary currencies that make that up, just to get a feel for what's going on. I believe that the U.S. dollar index is moving lower, so we're not trading at 102.87. What this does have, it has profile support at 101.64. So that's the first piece of information I gave you, and price is trading with inside that profile. It has a sell zone between 103.66 and 104.34. That's coming from the daily time frame. On the weekly time frame, I believe we negated I'm not going to be able to open this up. So that's what's going on in the daily time frame. Let's shift our focus from the U.S. dollar index to the components of the U.S. dollar index, or at least 3 of those. The first one being the euro. That's going to be up on your left-hand side. The euro, as you can see, well, it didn't populate. You'll see an A to B equals CD pattern drawn in there. That's not the one that I've actually been eyeing right now. What I'm eyeing is a potential TD9 count top. Now, we're not there yet. Today is bar number 9. This needs to be able to spike above the high from last week. The high from last week that I'm referring to was April 3rd, and that high being 1.1146. If price is able to spike above that today or tomorrow, it's got a ways to go, but if it spikes above that tomorrow, the euro will confirm a TD9 count top. Now, if it does that, because of its weighting inside the U.S. dollar index, almost 58% out there. Then you've got a top. That would suggest that price would head lower. That would put strength in the dollar, weakness into the euro out there. But right now you've got a rally. Price is trading above its oscillator and change line. Now what happens if it doesn't take that out? There still is. It still is a significant level out there because there's a sell the D point pattern, and it was because of the. Well, I gotta really kind of take that back because right now, if price today closes above that bear shooting star, that's at 1.105. We're trading above that right now. It negates that pattern out there. And the only thing that it would have would be that potential for the TD9 count. So watch that first level that I just gave to you, that shooting star candle. The top of that, that's resistance. Does price close above that? And it being, again, 1.105. And then you're waiting for tomorrow to see if you get a spike in the euro above that prior high to go ahead and set that TD9 count. Now, in the case of the Japanese yen, there's an A to B equals CD pattern to the downside. With regard to TD9 counts, no signal there for us to be paying attention to. As this moves lower, it's getting stronger. U.S. dollar index is getting weaker. In the case of the Great British Pound, the Great British Pound right now is trading below its oscillator and change line. It has a sell the D point top out there. Odds favor that price is headed down towards the 125 level. If it does that, it's getting weaker. The dollar would be getting stronger out there. With regard to Bitcoin, just since I have it up on the chart here, and I might as well cover it, Bitcoin is trading below profile support, bullish profile support, that is. It's trading below its oscillator and change line, and it did it yesterday negate that? It did, and it negated a Rhodes momentum indicator bottom pattern yesterday out there. So at this stage here, it needs a new bullish reversal candle to generate a new Rhodes momentum indicator bottom pattern. Short of that, it's suggesting that it wants to head lower out there. So that, in essence, is what's going on with the U.S. dollar, as best that I can provide that information to you, and what's going on with three of the six currencies that make up that index. The next request coming in from Ronan inside the Tigers Den. And Ronan would like to see if Stevie can find some place for PAA to tell him that it's going to bounce. Well, it ain't now. The first level where there may be some support out here is going to come from the weekly time frame, and that's at 1545. That's its TD9 count breakout level. We've been down to a low of 1558 out there. There's no weekly bottom signal out there, so that's the first place where price may get to where you could see a bounce. Now that's the weekly time frame. The daily time frame out here, let's open up the daily chart. Daily chart. Wow. It's taking out a breakout level, a couple breakout levels. Big A to B equals CD pattern to the downside. It needs a bullish reversal candle to confirm a bottom. But I don't see, well, when we come back from this break, let's look at the 30-minute time frame chart. I don't know how minute you want to get, but we'll look at that 30-minute chart as soon as we get back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets. with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We're taking a look at the ticker symbol for ticker symbol PAA. This is for Ronin inside the Tiger's Den. And so, Ronin, your question was, is there any kind of bounce? Well, turns out that at 11:30, this formed both a Rhodes Momentum Indicator bottom and a wave number 7, letter G bottom out there. So it does have a bottom signal that would be negated with a close below on a 30-minute basis, a close below 1558. If it doesn't close below 1558, what you should see is a short rally that gets you up. You should see a rally that gets you up towards a 1609, 1625 level. That is where on a 30-minute basis a counter trend move would come to an end. So watch that should this rally. And if you can close above that, then the move would take you up towards 1617. So to be, completely honest, is there the daily, the weekly, the monthly look terrible, but that doesn't mean you can't get some type of a little short-term counter trend move out there, and that would be courtesy of your 30-minute time frame. So that's what I'd be watching, Ronan, to the extent that you want to trade PAA out there. Sharky wants to take a look at HUT. HUT is a ticker symbol. So let's go take a look at it. See what and the question is. I don't remember if there was a question. Maybe just to take a look at it. For potential either way, up or down. So when we take a look at HUT, you'll see that it's got a Rhodes Momentum Indicator signal that has been triggered. It just has not generated the bullish reversal candle that it needs to complete that pattern. We'll come back to the daily time frame because on a weekly basis, you've got a completed TD9 count bottom. So come Friday, if price closes below last week's low, that'll negate that signal, that low being 1004, and then that's going to suggest to you and I that price might be gunning for 767, which is its monthly TD9 count breakout level. Now that's got a TD9 count top, and price in essence is testing the bullish structured zone of that profile, even though it's trading below it. That bullish structured zone is 1105 to 1337 out there. So what this is really waiting for is a bullish reversal candle. Should you get that over the next couple of days out there, then you're going to have a daily bottom, a weekly bottom, and possibly a monthly bottom, and that price will have held, let's say, the buy zone area out there. So what you're looking for, if you did get that bullish reversal candle, then what you'd be looking for is you've got a battle 1165. That's the first level you need to see price get above, the bottom of its profile. Counter trend move, if that's all this is, would come to an end between 1165 and 1294. Therefore, if price were to close above 1294, you're off your way to the 1487 area out there. The weekly time frame chart says as long as that TD9 count bottom pattern holds, it wants to rally towards 1639. But you already know the other battles that you've got. Should that unfold, wait for that daily bullish reversal candle to confirm that bottom. And thanks for your request, Sharky. Much appreciated. Nicholas wants to take a look at AMD. Really the same kind of question. Is it a buy? Do we have a bottom out there? It turns out that AMD is going to go ahead and form a TD9 count bottom pattern today. It will complete that tomorrow. So you do have a bottom pattern in AMD. What should it do for its daily time frame? It should rally up towards its oscillator and change line, and that is at 90.68 or so. That's going to change as price moves up and down. If price can get above that, the next area of resistance would be in 103.35 to 104.75. Let's go take a look at the weekly chart. The weekly chart has an A to B equals CD pattern to the downside. It needs a bullish reversal candle to confirm a bottom out there. So the weekly is the one that's a little bugger. The monthly chart, which did form a Rhodes momentum indicator top, did also form an A to B equals CD pattern to the downside. It is potentially at support, which is its breakout level, and that's at the 78.96 area. Now, we'd prefer to see a bottom pattern, but it can be a bottom just getting back to the breakout level. So you want to watch 78.96 most certainly on a monthly time frame. Does the daily have a bottom? Yes. Does the weekly? No. Does the monthly? Yeah, quasi possibly, as long as it is able to stay above, close above 78.96. So that's what I see when I take a look at AMD, Nicholas. Hope that provided the information that you were looking for. And as always, thanks for your requests. Now, I believe that Stevie has been able to get through all of the requests out there, and that is a beautiful thing. Of course, I'd love a couple of more, so if you are listening and you're inside the Tiger's Den, that's probably about the only way. You can try by email, but oftentimes they don't end up getting here in time. But we got 4 minutes now and another couple minutes when we get back. So if there is something you'd like me to take a look at, please let me know. In the meantime, let's go back over to the main screen out here. Just take a quick peek around, see what we want to take a look at. You know what? Let me just show you the cash indices. Might as well show you the cash indices out here. Daily cash indices. And here what you can see, really the same kind of pattern that we've got. You've got A to B equals CD patterns. All have attained their 1-to-1 level. So in the Dow Jones Industrial Cash Index, it needs a bullish reversal candle to confirm a bottom. Bar number 9 will complete today, but it needs a spike below Monday's low to generate a TD9 count bottom pattern. Same thing for the S&P 500. The exact same setup there. Exact same setup for the NDX 100. In the case of the Russell 2000 for its cash index, it's going to go ahead and did it tick below Monday's low. Monday's low was, sorry here folks, having a little bit of trouble. Monday's low was 1733.20. We got down today to 1733.20. Same low. But what it does have, it's got the buy the D point bottom pattern out there. That was a key reversal bar that generated that signal on Monday. But I think the Russell, even though it may be giving us the early signal of a bottom here because it's the week index, what's the week index doing? We still need to get the confirmation from the other three. In the case of the semiconductor index, it's got a TD9 count bottom pattern. It should rally up towards its oscillator and change line. That's at 38.85. If you take a look at the transports out here, the transports need a bullish reversal candle to confirm a buy the D point pattern. NASDAQ composite, very much like the NDX 100. It needs either a bullish reversal candle or a tick below Monday's low out there. And finally, the New York Stock Exchange, it needs a tick below Monday's session out there. And that Monday session here for the New York Stock Exchange is at the level, we need to tick below today or tomorrow, 16,956.31. That would trigger a TD9 count bottom pattern. That's what's going on with the cash indices. What else should we take a look at out here? Let's take a look at NVIDIA. Nobody has asked about NVIDIA today. That is a first. NVIDIA must have bottomed. There's nobody asked. That's pretty crazy. That's almost the number one instrument that is asked about is what's going on with NVIDIA. So we're going to go find out by pulling up the stock chart out there. But if NVIDIA, I believe, it did form a TD9 count bottom on Monday out there. And what NVIDIA is struggling with is that oscillator and change line. The oscillator and change line being 101.32 right now. So we're trading with inside a new profile formed yesterday. Support at 91.87, resistance at 112.87. The key here for the daily time frame is going to be that 101.32-ish area. If price can close above that, you'll have a little bit of a battle at 105, and then another battle at 112.87, and then following that, if price can clear that, a battle at the 118.84 level. What NVIDIA really needs on a weekly basis is a bullish reversal candle, and if in fact it's able to get above the daily oscillator and change line and rally, you could get that come Friday. That would be a long-term, that would be a Gartley buy pattern out there for NVIDIA. And quite frankly, I mean, it's opened up the weekly time frame chart. Has this ever generated a Gartley buy pattern for its weekly time frame out there? And the answer is, I believe that it has, and it might have done that as we were getting back towards the lows back in October of 2022 out there. So you want a bullish reversal candle, but the daily looks pretty good. Now you're just waiting for the weekly to generate a similar message. Steve Rhodes with TFNN. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. So I thought what we would do is maybe take a look at Goldilocks to end the show out there, since that is right up at a potential resistance level. So let's not get caught up into the numbers, although one heck of a rally. What it's doing, it's trading right up into this green oscillator and change line. The print on that is 30.9960. We're at 30.9890 out there. Now, what we're looking for, is there any kind of topping signals on the intraday charts out here? Well, if we go down to the 10-minute time frame chart, let's go to the shortest time frame first. You have both a TD9 count and Rhodes Momentum Indicator top. If price were to close above 3104.70, it negates that signal. On a 15-minute time, I'm not going to worry about the 15-minute time frame chart, but it also has the same Rhodes Momentum Indicator top out there. On the 30-minute chart, it's got that same Rhodes Momentum Indicator top. On the 60-minute time frame chart, we are in wave number G, wave number 7. Now that needs a lower high to confirm that pattern out there on the hourly basis. We're bar number 8 on the 2-hour time frame chart. That says, in this 2-hour chart here, this candle completes at 12 noon. So bar number 9 at 2. Bar following bar number 9 come the 4 o'clock time frame out there. A 4-hour time frame chart, I don't see any issues out there, nor with the 5-hour chart. So we do have some topping signals, as you see on the intraday charts out there, as gold is dealing with a potential resistance level. Now, if it can close above that green oscillator and change line, it ought to make a move up towards the 31.32 level. That is the center of its profile, and above that would be 32.01. Just out of curiosity, what is the GDX doing today out there? With gold up $100, if this is the GDX ought to be rallying like heck, right? Let's go see what is the GDX doing. Let's see if we can get to this before the show ends out here. The GDX, come on. Go ahead and populate. Not much of a rally there. Something to think about. In case of the GDX, you do not have a bottom pattern on the daily time frame. You just have price trading with inside his profile. Support at 40.93 and resistance at 46.94. Folks, thanks so much for watching the show today. Stay tuned for all the great programming. I'll be back with you tomorrow on Terrific Thursday. But in the meantime, please have a wonderful Wednesday. Be safe out there. Take care.